Hey, welcome to Stock Sessions. My name is Jeffrey Lin. So just a disclaimer, as always, these videos are only for educational purposes and these are not actual investment advice or recommendations. So you probably heard about short selling in the financial news and how certain professional investors use short selling to profit from a stock falling. But most people don't really know how short selling actually works or how to do it themselves. So a very simple example is, let's say you have this iPhone 10 and it's brand new and it's just sitting in your closet somewhere collecting dust. And I come over and say, hey, can I borrow this iPhone for a couple days and I'll give you one back? And you say, sure. So I go and find somebody to sell this iPhone to for $1,000. So now I have $1,000, but I owe you an iPhone. So I go and find the exact same iPhone on sale and I buy it back for $800. So I give you back your iPhone, and in the process, I made $200 because remember, originally I sold your iPhone for $1,000 and then I went and bought it on sale for $800. So the difference right there is $200, which is the profit that I make. So how would this work with the stock? Well, let's look at this chart with Tesla and see how we can short Tesla stock. Let's say you want to short Tesla up here. So you want to short it up here at $900. What that means is you would go to the broker. Automatically, this all happens behind the scenes, and you would borrow a share of Tesla and you would sell it. So you would immediately collect $900 when you shorted the stock right here, and eventually when you bought it back, maybe somewhere down here at around 400, your profit would be $500. And you have to buy back the share of Tesla because remember, you still owe your broker the share of Tesla that you originally borrowed from them to sell at $900. So after you buy it back, you give that share back to your broker, and the broker has their Tesla share, and you made $500 from this short sale trade. It's exactly for this reason that you have to borrow shares from your broker to do any short selling, that there are more advanced requirements on accounts that can do short selling. So most accounts can't do that. You can apply for it if you have certain trading experience and if your investment portfolio value is above a certain size, then your broker would approve you to have a margin trading, which is just a fancy way of saying that you would be able to borrow either money or stock from your broker. Now, short selling is very dangerous and an advanced strategy because you can lose a lot more money than what you initially put in. For most investors, the worst it can get is that your account can go to zero and you can lose all your money. But with short selling, you can actually lose more than that. So let's look at an example again using this Tesla chart. So let's say you got the direction wrong. You were trying to short Tesla, but instead of it falling, the price went up and you had to buy the share back at a higher price. So let's say you shorted Tesla here at around $300 and you collected $300. Right. Now, instead of Tesla falling like you were hoping it to do, Tesla went on a huge bull market run and it went all the way up here to about $900. So if you ended up having to buy it back at $900 up here, you would end up losing $600. And if Tesla had gone up even more, you would lose even more than that, several times more than the initial amount of $300 that you got from selling that stock. And again, I can't emphasize this enough. Short selling can be very dangerous because you can lose an infinite amount of money essentially if the stock you're trying to short kept on going up and up and up. So just remember, always use your risk control, risk management, and always use your stop. So after a certain point, if you lost too much money, you have to get out.